Attendees are in listen-only mode.
G'day everybody, welcome back to another Ask the Expert webinar series for the 23rd of April, and as usual we'll start with a little bit of something to put a smile on your face, and I absolutely love this one. Just in case you can't make that out clearly, we've got Julia here with a pair of rat nose slippers on, and the cops saying, if they're killing you, do you have to keep wearing them? And her response is, I do, I do. I don't know what else is going to take for this government to fall over, but they are just absolutely accident prone, so I think it's just merely a matter of time. And Julia may not be there at the next election anyway. So I thought that was an absolute classic, and I really like this one as well. There's Wayne Swan, budget surplus or die, and the Somalis or whoever they are saying, poor guy, what a miserable existence, and it must be pretty miserable for everybody in the Labor Party at the moment, I guess. So there's a spot of something to put a bit of smile on your face. There's not a lot happening in the market today, in fact really since last week as well. There's a few very stock-specific opportunities, but really across the board we've seen the ranges really tightening in. We've seen volumes drying up. It's almost like everyone's waiting for something to happen, and inevitably low volatility periods get followed by high volatility. The only thing is we don't know necessarily in which direction, and we don't know when, but I can assure you there'll be a period of higher volatility coming at some point in the not too distant future. So it just pays to bear that in mind. Okay, just a reminder on the general advice nature of the information in these webinars. So let's just do a quick recap of what's happening in Australia. Looking at the ASX index, have we broken out or have we not? It's really hard to pick at the moment. We've had one breakout that turned out to be a false breakout above 43.50. We then had another move above that on Friday. Now today it's kind of eased back again, so there's nothing really clear-cut about our market at the index level at all, and these really are fairly tough trading conditions to make money. They're not dangerous, so you're probably not losing any money, but it's a bit challenging to try and make money at the moment outside of a few very specific stocks. Then we'll have a look at that index in just a minute. So pretty lackluster day today with very low volumes after the first hour, and we'll at this stage I don't really know what the triggers might be to change that through the week, although the futures are moving down as I speak now. But I'm not expecting anything terribly different to what we've seen of late. Resource majors are pretty stuck in the spot that they've been in for some time. Banks are only slightly better than that, and we'll have a look at those couple of sector charts. Graphite stocks are starting to attract the sort of attention that rare earths did a couple of years ago, and we'll just have a look at a couple of stocks, Syrah Resources and Archer Exploration, not as any form of recommendation, but merely just to highlight the fact that there is some momentum behind those stocks. Small cap energy stocks are still probably the place to be, but volumes really have dried up quite dramatically, so you need to be quite careful in this space about the entries. And these are the sort of stocks they don't have a cash flow. They're going to have to periodically raise capital. These are the sort of stocks, if the S&P closes down 2 or 3% one night because something goes wrong somewhere, these stocks can lose 10 or 20% on the open, and you've got nowhere to hide. So just make sure you don't end up with a portfolio absolutely packed full of these sort of guys, because they can really hurt. Gold stocks, are they ever going to fire off when you're living with it day by day? It's sometimes you get a little bit frustrated and impatient that it'll never happen. I'm 99% sure that we are going to see a major run in Australian gold producers. I'm getting less and less confident about when that will be. My mind hasn't changed about the fact that it will happen, but obviously the lack of momentum for gold stocks around the world is an issue, and it's hard to understand why that is the case. But it will happen at some stage. Now, the futures market is moving down this afternoon, and I understand it's because Spanish bond yields have moved up back above 6%, which is obviously a trigger that concerns the market. But look, I think it'll be short-lived, because markets do know that if things start to get out of control in Spain or Italy, that the ECB will just basically step in and provide whatever liquidity is required. So I think these are temporary situations, but they can still kind of cause markets to get kicked around a little bit as well. So it's still worthwhile being a little bit prudent at the moment, I believe. Let's just have a look at the ASX 200. So this is the index. And if we pan back, 4350 was a pretty key area. Let's put a horizontal line through there. So that was a pretty key area through there. You can see that we had it was tested about 9 or 10 times. We had a minor little breakout, which was only intraday on the 2nd of April. We then immediately fell back into the range. We had another breakout on Thursday. And as you can see already, our finish today wasn't really all that enticing, so it's hardly what you'd call a break with any sort of momentum. So fairly disappointing at this stage. Part of the reason is, you can see this is the finance index, has been moving higher since early March, but really not done much in the last 3 to 4 weeks. And if we have a look at the materials index, you can see it's done even worse, and really has just been in a trading range since early March as well. So the banks have really managed to hold the index up. Otherwise, we'd probably be down closer to 4,200, I suspect. So this pretty much sums up what's going on in our market at the moment. It's just sideways. The range is getting tighter and tighter, and that means there's less opportunities for making money. However, in the Trading Edge webinar tomorrow night, I certainly will be covering some trading techniques in a lot more detail. So if you've not registered for that, then I would really encourage you to do so, because you'll have the opportunity to learn quite a lot tomorrow night. And we'll just have a look at the Small Ordinaries Index, because that's obviously has some importance for a lot of the stocks that people are trading these days. You can see it hasn't been a bad move since January. This is a weekly chart we're looking at. So whilst they've not really done much in the last 4 to 6 weeks, it's still been a pretty reasonable move, up something like about 12 to 14%. So certainly the small caps have outperformed the others. Sorry, I'll just go back to, I just want to have a look at those couple of stocks that I mentioned. There's graphite stocks, so Syrah Resources, SYR, it's you can see it's had a heck of a move back on mid to late January. Was trading at 20 cents. Now we're over $1, so there's a 500% gain since January. You can see there was a sharp move up, then a lengthy consolidation, and now another sharp move up. I don't know where this is going. I just know that buying at the current level is dangerous. It may continue to rise, but every day that this rises, the risks get higher. So if you want to go playing in this sandpit, you want to be very, very careful, because there is a technique for how to trade these stocks. and the other one is AXE. Hasn't run nearly as far as the other one. It's basically doubled from around about 20 cents to, or about 18 cents, up to about 33, 34, and really is just trading in a bit of a consolidation range at the moment. But certainly there's certainly more interest, there's more media attention to graphite stocks, and it's just smelling a little bit to me like the early stages of the rare earth story, which was a couple of years ago. So it'd be interesting to monitor those and see how they play out. Now, interest rates, the producer price index today came in lower, and so that makes it easier for the RBA to cut rates, if indeed that's what they want to do. And the futures market is basically pricing in about a 90% chance that we'll see an interest rate cut at the next RBA meeting. Whether that actually has an impact on your mortgages or not will be very much in the hands of the banks, who seem to be thumbing their nose at the RBA and saying they're going to do whatever they want to do. And I suppose that's fair enough, because I'm of the view that central banks around the world are completely screwing up free markets. You just look at what the Fed has done and the devaluation of the US dollar over the last 20 or 30 years. So I think we'd be better off without central banks and just let market forces play their part, quite frankly. Now, the CPI is due out tomorrow, so that will be the clincher in terms of an interest rate cut, but certainly the way that the Australian dollar has slid today suggests that the CPI tomorrow is likely to be lower as well. Sorry, I still had two little wrong things in there. Now, looking at the S&P, they're in the middle of reporting season. The results last week were generally pretty good. General Electric, which is one of the world's biggest companies, said they're expecting double-digit growth, so that's a real positive for them and for the US economy. Microsoft beat expectations and the share price went up about 4.5%, so there's actually been quite a high percentage of US companies that have beaten expectations. But I would have to say that those expectations, which are set by analysts, were really pretty low, so no real surprise. And there are 180 companies in the S&P 500 reporting this week, so this is a huge week for the S&P. So that could be a market mover depending on how those results come through. And the positive earnings that we've seen in US stocks have really been diverting the focus away from the European debt problem, and that's why we've seen markets just flicking backwards and forwards. If something untoward happens in Europe, then markets tend to be negative, and then we get something positive happens in the States and markets forget about Europe, and it's yeah, these kind of trading conditions are difficult because there's no real direction and markets are just flicking backwards and forwards on news as it comes out. And as I said earlier, this low volatility period will be followed by higher volatility. We'll just have to wait and see when that is. Now, just looking at copper, I'm finding the copper chart a bit hard to read at the moment, but it could be just a bit dicey in the shorter term because we broke a $3.80 support level, dropped down to $3.60, is trying to rally back, but not doing a very good job of it at the moment. So if copper were to continue to work its way down towards the low $3, then that wouldn't be a particularly great sign. So we're getting some conflicting signals is the bottom line. Now, I just want to show an example trade, and again, this is by no means a recommendation, and it's merely for the purpose of illustrating a particular point, and I'm going to cover this point in more detail tomorrow night. Let's just have a look at this this stock, which is called Boral, BLD, and they came out with a profit downgrade last week. I think it was on Friday, and it wasn't a particularly big one. So this opportunity is not setting up nearly as well as many, and I will be highlighting a couple of much more significant profit downgrade moves tomorrow night. But I just want to make the point that these kind of profit downgrades can provide a really good opportunity for, particularly for trading to the short side, if that's something that you do, if you're in the game of short selling. Then profit downgrades played the right way can be one of the most reliable trades that are out there. There's 2 or 3 that I think have probably a better than 80 to 90% probability of success. However, any of these trades depend on how you enter, how you structure your exits, and how you actually take your profit and manage your trailing exits. So it's not as simple as just basically piling in when there's a profit downgrade. But the point I wanted to make is that obviously we don't know before the event that a profit downgrade is coming. Sometimes you can get a bit of an indication in the chart, but often, and in this case we have, because you can see this price has come back from around $4.50 and come down to about $3.80 prior to the profit downgrade. So I suspect people in the industry and people in the know knew that things weren't going fantastically well for Boral, and so the price has come off. But quite often those profit downgrades can come out of the blue. So it's not possible to get in advance of them. So the name of the game is not trying to capture the big fall that happens when the downgrade occurs. The object of the exercise is to then be able to run a successful trade starting from the day after the profit downgrade. So that's really the point I was wanting to make there. But a bit more about that tomorrow night. So this is a slide that I showed last week, and I think it's just a couple of minor amendments, but I think it's still absolutely valid, so I just wanted to remind you of it. A lot of traders that I see and I talk to just want to talk about what stock to buy, and there is a whole bunch of considerations that really take place prior to that, you getting to that point. And the first question that I always ask myself is, how much exposure do I want to have in the current conditions? And so I make a decision on that first off. And just an observation in that regard, I'm seeing far fewer breakouts. I do a daily scan every day looking for stocks that are breaking out on rising volume. I'm getting far fewer now than I usually get. If we go back a couple of months, I was getting 30, 40, 50 a day. Most of them were rubbish, but there was a few gems in there. Now I'm down to maybe 6 or 8 or 10 at the most using the same scan. So that's just an indication of how much momentum has gone out of the small cap sector, and that's why I'm saying that you really should take a lot more care at the moment with that sector. The next question I ask myself is, what sort of balance do I want between long and short positions if you are someone that does engage in short selling as a trading opportunity? And my view is, if you don't engage in short selling, then you're trying to play the game with one hand tied behind your back, because to me it's, you can make as much money, in fact you can make more money more quickly on the downside than you can on the upside. Now, once you've answered those questions, then we get to some stock-specific questions. For instance, is this sector in favour? Is obviously a key one, because if the sector is not in favour, then I can tell you, no matter how good the stock is, the price isn't going anywhere, or it's not going anywhere very far. Then we start looking at low-risk entry points. Where do I exit if you get it wrong is another important question. And then, of course, how to take profits. So, if you like, it's a cascade of thought process that you should go through every time. So, yeah, I just thought that was worthwhile reiterating that again. Now, for those that are looking for some more some more learning, beg your pardon, there's the Traders Edge webinar tomorrow night that's been advertised in all sorts of places. So that's at 8 o'clock Eastern Standard Time tomorrow night for non-members of Specialist Share Education. There's going to be a really, really good perspective on trading opportunities and trading techniques. So I'd really encourage you not to miss that, because you will learn quite a lot. If you're not sure how to register, then you could just send an email to support@specialistshareeducation.com.au and we will help you out with the registration process. It's free, of course. Now, questions. I didn't have any in advance, but I've got a couple of questions that have come up now. So basically, I'll shut up and hand over to you guys now. So the first question is, how will a new socialist regime in France affect Europe, our stock market, and miners in Australia, including gold? Gosh, look, I have to say that I'm not that familiar with French politics to really have a view. I would imagine if it's a new socialist regime that there's probably not going to be a whole heap change, because to my mind a lot of the problem that Europe is encountering is the product of 2 or 3 decades of social welfare programs that have been either mistargeted or very poorly executed. And so if it's another socialist regime, I don't think in a big picture view there's going to be very much change. I think there are far, far bigger issues that are going to affect currency markets and affect bond markets, and ultimately that's what's going to affect stocks and gold. So if you want to know where stocks and gold are going, you watch the bond market and the currency market. Now, the bond markets in Europe are kind of all over the place. Bond yields in Germany are relatively low, certainly compared to a lot of the other countries. And Germany really has got their house in order. They're going really well at the moment, economically and from a manufacturing perspective. And a good part of that is because of the advantage they've got with a low euro. If they had their own currency, then they would be far less competitive from an export point of view. The other end of the stick, you've got Spain with bond yields now creeping back up above 6%, which is really starting to get to to the worrying stage. You've got Italy, probably not a hell of a lot better. So there certainly are some issues there. So keep an eye on those bond yields. I think is a far, far bigger question than a change of government. Now the next question is, how do I buy GE stocks? Well, GE being an American company, you can buy that through Australian CFD providers. You can buy that through Australian companies that do brokerage on US stocks. My only knowledge of companies that do that, they charge an absolute arm and a leg. I know I looked at buying a UK stock once through ComSec, through their international brokerage division, and the brokerage rates were just prohibitive. So there was no way I was interested in doing that. So yeah, but again, as I said earlier, my other question would be, I think there's a whole bunch of questions you've got to ask prior to asking about how you buy GE stocks, such as, does that fit in your trading plan, or are you just trying to opportunistically, grab something out of thin air? So I would really encourage you, Peter, to have a coherent plan, and then when you hear something like what I said on GE, then you've got to ask yourself, well, does that actually fit my plan? Does that trade work for me? Or am I just straying off into a field that I shouldn't be in because there might be an opportunity there? Now the next question is, just noticed gold dropped to 1832 and the Dow's down. Yeah, well, my understanding is, and I might be wrong here, my understanding is it's because Spanish bond yields have kicked back up above 6%, and that's put the wind up the market. That's my understanding. Now, next question is where to find the index participants and co-position, if possible, in Excel format. I assume you're talking the Australian index, Roman. I guess, I don't know immediately off the top of my head. I would imagine you'd be able to find that somewhere on the ASX website, or you might want to look at, if there's a website, I've never looked here, but you might want to have a look at a website for Standard & Poor's Australia, because they do all the sector weightings. So you might find some joy there, but I don't know off the top of my head. There's another comment here, the DAX just lost 150 points. Yep, well that's all part of this whole thing with Spain, and you know, as happens these days, an event in Spain really shouldn't impact what's going on in Germany, but it does. Traders and computer algorithmic trading systems around the world, they all just react, and a great analogy that I heard about 3 or 4 years ago, I think, is appropriate to describe what goes on these days. And if you imagine a telegraph wire with 100 birds sitting on it, and one bird takes off and the other 99 all take off as well, they have no idea why they're taking off, but they just thought they saw one guy go, so they thought they'd all go. And I think that's a pretty good analogy for what happens in markets these days. Some selling starts and traders just panic, computer systems take over, and basically everything gets sold. And it's yeah, it's frustrating to say the least. Now, a little while ago I had 2 or 3 gold-producing stocks to watch. Could we please share those with ASX codes? No, I can't, for reasons that I've mentioned before, because in this public forum the law does not permit me to go to that length to talk about stocks that are either stocks for our members or stocks that might be on my watch list, because that can be taken as an endorsement. And I'm just not allowed by the law to do that. Okay, thank you, Roman. IG is doing a range of EU stocks. So yeah, there's IG markets, so the local CFD providers, IG markets, CMC, etc. Oh, okay. Right, thanks for that, Peter. Yeah, your wife works for GE in the medical division. Would like to hold for her. Yeah, well, I don't know. I still stick by what I said before. You know, to me, trading and investing is a business. It's not sentiment. It's not, you know, related to anything other than a cold, hard business decision. Can I make money out of this? So, frankly, you know, if my wife worked for a company, it would matter not to me. I'm looking purely on, I've got a trading plan, I've got an investing plan, and I look at each transaction and I ask myself whether it fits that plan, and if it doesn't, then it doesn't get a Guernsey. That's pretty much the way that I do it. Okay, so just another reminder that the webinar tomorrow night, the Trading Edge webinar, which I think you'll get a lot of benefit out of, starts at 8 p.m. Eastern Time tomorrow night. So that appears to be all the questions. Thanks for your input tonight, and hopefully we'll see you tomorrow night. Cheers.